All right, so welcome into the live stream today. We're going to be jumping into Bitcoin mining, what the future of how mining operations are running, but also how this may layer into the next bull run around Bitcoin. A lot of things are happening not only within the space, but also within the dominoes that may be starting to connect the dots here across the crypto community. So we're going to dive in deep. My name is Paul Barron. Welcome back into TechPath. Joining me today is going to be a special guest. She's going to be coming on as a special guest kind of correspondent from the mining category. You have seen her on our show before. We'll be breaking down not only news and information, but also a little bit more of opinion on how the market is moving. And I want to welcome, of course, Sue Ennis from HODL. Great to have you back on the show.
Hey, great to be here. Lots to chat about and pumped to get into it today.
For sure. Of course, obviously, when we kick off a mining show, we want to kick off with HODL, HODL being one of the leaders in the space. And if you look at just some of the things that you guys have been doing, Sue, I was looking at your most recent PR that you guys did in terms of your update. Let me kind of zoom in on that for everybody. Had a lot of activity here. I don't want to steal the thunder. Tell me about what you guys have been doing, because there's a lot that has started to hit here for the month of June and July.
Yeah, so as it stands right now, we have one of the highest amounts of held Bitcoin on our balance sheet. We have over 7,400 Bitcoin that we haven't had to sell yet, that we haven't encumbered. And part of the reason for that is because we were actually preparing for this bull market in the last, we were preparing for this bear market in the last bull market, because we've been around for so long. HODL is also one of the oldest miners in the space. We've been around since late 2017, which means that we've actually already been through and survived and thrived through a bear market. So we certainly have the battle wounds to prove it, but also have the foresight. You know, when the going is good, like it was last year, you still need to prepare for the cyclical nature of not only the market, but also how this asset class trades, especially since it now trades like a risk asset.
So we're seeing obviously some photos and videos of your operations. In terms of the operations themselves, because I do want to get into this, the overall number of operations that you're running right now, what is that up to today?
Yeah, so right now we've got 109 megawatts of power in Alberta, which actually some people call the Kuwait of North America. So it's a very resource rich province in Canada, very pro business, very pro investment. And jurisdiction does matter when you're in the mining space. You want to make sure you've got regulators who are very favorable and pro business. So we love that we're in Alberta. So we've got 109 megawatts in production there. And then we also have 25 megawatts in production in North Bay, Ontario. And that's behind the fence power. And what does that mean? That means that we're getting power at 2.7 cents per kilowatt hour Canadian. And obviously at the end of the day with mining, when the number one cost for your business is energy, having the lowest price cost of energy possible is very meaningful and is a meaningful impact on your business. So we're pretty thrilled about that. Yeah.
All right, so growing in terms of locations, total kilowatt
Yes.
power construct there, also growing. We're seeing the hash rate itself starting to get even more complicated. The market itself is also starting to not only have, I won't say a little bit of growing pains, but obviously going through a bear market, you do see this from time to time. I was looking at a story here recently on Marathon, who had secured another 100 million in a loan. They had basically secured this against with Silvergate, which was a Bitcoin-backed loan. We've talked about Silvergate on our show before, which Silvergate is one of the banks that really gets involved in the crypto space a lot. But right now, when you look at the growth of miners and you look at what Marathon's done, obviously HODL has been very aggressive in growth. What are some of the strategies that you guys see going forward to be able to deal with the power required, both from a site standpoint, but also from a technology standpoint, to deal with the hash rate as we start to see the hash rate really become more complicated to solve for more Bitcoin?
Yeah, so let's zoom out just a tiny bit before we answer that question. So right now, Bitcoin year to date or year over year from last year has dropped 50%, but difficulty is still up by 8 to 10%, which is a unique dynamic relative to past bear markets, and a lot of that has to do with the fact in North America alone, 16 new publicly traded miners came to market in the past bull market. So you do still have quite a few players that are up and running and still hashing. And again, this is very different from the last bear market of 2019 and 2020. Also, when you're evaluating in general as an investor, the health of the mining space, it's really helpful to look at things like what is the spot price of mining equipment. So you can go to hash rate index and see, like what is the spot price that, the newest generation of mining equipment that's available on the market trading at. Right now, we see a spot price of about $38 per terahash for MicroBT equipment and Bitmain equipment. So that's some of the top vintages of equipment available, newest vintages of equipment available. And that price point is meaningful because it's still quite a bit higher to the prices that we saw in the last bear market of 2019, 2020. That's where we saw prices in the ballpark of about $20 to $30. So, when you hear things about miner capitulation, sort of the health of the industry, it is helpful to look at sort of where is spot trading. And again, as a reference point, in 2021 bull market, we saw spot prices anywhere from $90 to $120 per terahash. So back to your question though, in terms of how are miners growing? I think the miners that have the most diversified business models are going to be doing the best because they're not single-threaded and sort of held by the whims of Bitcoin and hash rate dynamics. And what do I mean when I say that? So if you look at a company like Stronghold, so Stronghold mines Bitcoin, but they also have their own power plant. And they've come out publicly and said, if Bitcoin hits 22,000 per coin, we're actually going to power down operations and instead sell energy back to the grid. So that's an ancillary line of based revenue. HODL mining, we have an HPC side of our business and Web3 data infrastructure services support that pays us about 1.6 million in fiat revenue. So completely diversified, sticky, uncorrelated revenue to Bitcoin mining dynamics. We've also got a HODL. Traditionally, HODL, we do put work, which means we put it in in the past, we have put our Bitcoin to work in yield programs that, again, pay us in fiat so that we just have more fiat coming in to keep the lights on and not be so reliant on Bitcoin mining dynamics. So if you even look at a provider like Riot has a hosting suite of services, Core Scientific has hosting. Marathon is a little single-threaded in terms of their mining operations. They just mine in Bitcoin and own their machines. And so effectively, my opinion is, and I think a lot of the sort of pundits out there would say that, one business model plus leverage in a bear market is a bit risky, but a diversified business model plus, minimum amounts of leverage is a sustainable and healthy way to thrive and survive in the bear market. And it certainly worked for HUD-8 in past bear markets.
Yeah, and I think that's a good point, is the diversification. We have started to see that obviously within the mining industry itself. You guys have been one of the ones that have kind of led the way. If you look at just some of the hardware aspects of this, I was looking at this story here. It was kind of talking about the hash ribbons metric, which have been retiring for an extended period of time. This is, Blockware was saying that as of August 1st, hash ribbons had been signaling capitulation for about 55 days. Now, they go on to talk about this very good point, which is on June 7th. Since June 7th, other generation or new generation mining rigs have now been plugged in by both public and private mining companies, but the old gen have becoming a little bit more inefficient, over leveraged miners. How does a miner, I guess, because that's my concern. I think about supply and demand, especially around Bitcoin, and the issue of the GPU conundrum that we do face, maybe not so much in terms of supply chain right now, but definitely in terms of advancement from a technology standpoint. So you think about going forward here to 2024, the next halvening, even then the hash rate will be even more complex. So how does a miner start to forecast the technological need for that kind of equipment? Maybe that's not even on the market yet.
Yeah, so that's a really good question. In terms of the miners that were effectively kicked off the network, I did hear a stat about a couple of months ago about how something like 25% of the network was being hashed by S9s, and S9s are effectively one of the oldest vintages of equipment. You can kind of look at them as like the fax machines of mining equipment that have been around since about 2017, 2018. So about 25% of that network was using that equipment. And again, as difficulty has gone up, that equipment's equipment certainly has not been profitable to run. I think it also bears mentioning that miners in North America only account for about 20% of the total network hash. So, we're still seeing a ton of hash come out of Kazakhstan and Russia.
Right.
There's still some hash coming out of China too, which is wild. But in terms of the actual mining equipment efficiency increase, I don't have the exact number, but the Bitcoin Mining Council came out with really interesting stats about mining technology itself has had something like over 500% increase in efficiency over the past 8 years. I think it was actually 858% increase in efficiency over the past 8 years. And if you even look at things like Moore's Law, that's not possible to continue to have that type of efficiency year over year over year or over the next 8 years. I certainly do know that, there are manufacturers looking at things like reducing the chip size in order to increase efficiency. Not that we're going to see in the, 100 to 200% range, but moving down from, let's say like an 8 to 10 nano chip to a 5 nano chip, which would increase efficiency. I know that is certainly on manufacturers' radars. But right now, as it stands, I think that we are seeing increased supply of the newer gen machines in the market, which is sort of leveling the playing field. If you have the capital, it's not that difficult to get your hands on relatively competitive equipment. And then the newer gen models, again, it is being worked on, but we'll see sort of when that actually does come to market, because we are still seeing some of the supply chain constraints that all industry is still seeing. But some stuff is certainly in the works.
Yeah, this article kind of goes in line with what you're talking about, difficulty due to break the multi-month downtrend. Again, this is kind of pointing at the direction of that right now when it comes to miners, the return to early signals visible on chain thanks to these adjustments that we've seen. But mining difficulty is due for its first increase in 2 months. So again, this will be August 4th, which is coming up right now. So, and this has been after downtrends that we've seen. So with this being the case, and you look at kind of the future aspect of the acceleration, do you feel like this will slowly move up the chain going toward this next halvening, or do you think there'll be abrupt leaps in terms of mining capacity, in terms of hash rate, in about the next 18 months before we get to 2024?
I think we will see abrupt leaps. And again, this is just my opinion. And here's one of the reasons why. 5% of the difficulty, I believe that 5% of the difficulty downgrade from the past 2 months has also been due to curtailment. So Texas has had some tremendous amounts of heat waves, which means miners like Argo and Riot have had to power down and effectively give energy back to the grid, which is awesome. The fact that miners can just power down within a matter of about 10 to 20 minutes and support the grid in times of in periods of high demand. So I think once we see those heat waves abate, I think that we will see a jump in terms of the capacity and miners that are participating in hashing on the network. I think also if we see energy prices come back down, we are already starting to see energy prices level off a tiny bit. That also should be very bullish for miners being able to come back online, because it won't be so expensive for miners to put machines to work and start hashing. I also think if we see the price of Bitcoin go back up, that puts a lot of sort of the less profitable miners in a position where the margins do make sense to power up and get out of eco mode, because the profit margins will improve and go back, hopefully, one day to what we were seeing in 2021. So I do think that we will see hash rate go up a little faster than we're anticipating, because there are some sort of exogenous factors that are impacting the sort of near-term difficulty rates right now.
Interesting. All right, so there's some things to unpack within that. Obviously, one of the things we'll break into is Bitcoin price. So where is that point of no return for miners in general?
Yeah.
You can't speak for everyone, but I know you can talk a little bit to that point on HODL. Obviously, we saw just a little bit of how miners generate almost $500 million in revenue just in July. So we're continuing to see a pretty significant amount of growth, which is good. If you look at that, and I think we might have this map. I wanted to show you a map of the cost of electricity around the globe and how it pertains. And we'll zoom in on that, because there's a lot of hot spots within this. in terms of areas and how much it costs. The United States, not necessarily a perfect zone, but definitely one of those. Canada, where I know where your operations, it looks like it's about 24,000 to produce a Bitcoin there. But you look at some of these hot zones that are down under 5,000 or under $10,000 to produce a
You look at
Bitcoin.
Kuwait. I think Kuwait was the
Exactly.
most interesting one. That one was like $1,300 to produce a Bitcoin in Kuwait.
Yeah, so this is my point, is that with areas right now around the globe that do have some potentials for low cost Bitcoin production, what is the possibility of seeing more miner upstarts either into mobile mining rigs or some sort of advanced tech that could jump into these markets and start to really implement and take advantage of those power consumption opportunities?
Yeah, listen, I think if we can see a resolution in supply chains, and some of the logistics that go with actually trying to so one of the problems is we're under the same supply chain strains that most industries are in as well, but also there aren't very many reliable centralized logistics coordinators for actually transporting miners to and from different countries. So for example, when the Chinese exodus happened last year, so China shut down and sort of banned Bitcoin mining. Initially the media reported that, oh, there's all these new miners that are flooding the market, and they're going this, that, and the other, and we're going to see machine prices come down exponentially. And actually, no, that wasn't the case, because there is no central coordinating body to actually coordinate, transport, taxes, trusted counterparties to make sure that machines and equipment go, where they need to go.
Right.
We do think that a lot of the equipment from China went to Kazakhstan, but we certainly didn't see a lot of it reliably show up in North America. So my point is, if we can see a party step in and provide that counterparty risk, that sort of extra level of insurance that in fact equipment will show up as promised, on time, not broken, then I think we absolutely could see mining really spread throughout the world to some of these cheaper areas. But again, that does remain to be seen, because there's still sort of a logistics and supply chain problem.
Yeah, for sure. For you guys, and I want to get into that because there's some key elements there, I think, that have, the potential, especially when you look at the amount of Bitcoin that's left to mine. And I want to talk on that here in a second. Before we can continue on, of course, we do want to thank our sponsor today, and that is Opera Browser. Opera Browser, if you guys have not seen it, the cool thing about Opera Browser is that they've got some really interesting things around Crypto Corner, which is built into the browser itself. We use this on the show. It's how we actually showcase some of the stories and things of that nature. It's got a VPN built in. All sorts of things that you guys can do within it include browsing your own Twitter account and just being able to jump right in. So lots of that cool stuff. Make sure and hit like on the video as well. If you do like what we're doing here with Sue and you want to get more of this kind of stuff, make sure and just hit like, and we'll jump into that. We'll leave a link below if you like to use a new browser for your crypto mining research. Sue, I want to get into a tweet that was mentioned here. Let me see if I can pull this one up. Let's take a look here, and it's this one right here. So 91% of the 21 million Bitcoin right now been mined. 9% left to be mined over the next 118 years. So if you look at, I know that most companies may not put a 100-year plan together, but hey, you never know. Hut 8 could be around here in 118 years and looking for new types of mining going on. Obviously, a lot could change within that market. But if you look at the acceleration really and the complexity of how Bitcoin is going in this direction, is there anything that you guys are doing from a strategic standpoint? We'll talk a little bit about ETH and just kind of the shift over on the merge, what that means to you. But from a strategic standpoint, are you looking at diversifying into a variety of assets?
Yeah, so I think from a strategic standpoint, this has been one of the number one reasons why we've been so focused on HODLing our Bitcoin, because the ability to even obtain a stack of over 7,400 Bitcoin as a miner, which is where Hut 8 is sitting right now, is next to impossible, given where the network difficulty is at, given the halving schedule, given where energy prices are at. So for sure, hanging on to our stack has been a major sort of strategic priority for us because, as I mentioned earlier, we can look at things like how do we make the stack work a little harder? Maybe we become one of the largest Lightning node operators on the network. So that's certainly been a strategic priority for us, given sort of how much Bitcoin is left to be mined, and we're at with other pieces of this. And look, a big focus for HUD-8 has been, we don't think that the growth of the blockchain Web3 digital asset industry starts and stops at mine and HODL. We really believe in the real growth and move of Web 2 to Web 3. And what does that mean? It means that all of these new applications, from the Ethereums to the Solanas to the peer-to-peer lending networks that we're seeing, to mining pools, all of them need, and again, for the purpose of this conversation, we're going to call that the Web3 space. All of them need the traditional infrastructure services from a data center capabilities that Web 2 needed. And so HUD-8, that's an area of this growing business that we think is really interesting, and another way to support the proliferation of the blockchain and digital asset space beyond just mine and HODL and be minters of this reserve currency of the internet, is provide the data center and the infrastructure and the piping and the plumbing that this growing industry needs to survive and thrive. And we did that by buying data centers this past January to support not only Web 2 companies, but also the growing Web 2.5, Web 3 industry as well.
Yeah. Well, there's going to be, a ridiculous amount of growth. I continue to talk to so many different companies right now that are from kind of trying to leverage from a current Web 2 position into kind of that 2.5 Web 3 component that is starting to transition more aggressively now, more so than I thought, especially this early, because there's a lot of new services that are trying to make that leap, obviously coming onto the blockchain in various ways, whether it's through NFTs or smart contracts, moving into some sort of utility case, those kind of things that happen. When you think about companies that are trying to make that leap, because we've seen several that have been in the fashion side, the automobile side, the sports arenas, there's a few companies from a tech side that we could be looking at within the stock market that are being traded on today's stock exchanges out there around the world. When you think about that in terms of mining tech stocks in general, whether it's chip makers, et cetera, are there any ones that companies from a tech standpoint that you think in Web 2 that we should keep our eyes on in terms of emerging tech? Anything that really you think are going to kind of lean into where the future of Web 3 is going?
Yeah, that's a really good question. And this is not investment advice at all, but I do think that Intel, I like how Intel is now stepping into the mining chip space. Obviously, they're major producers in traditional Web 2 semiconductor business space. So I think Intel is really interesting to watch. I think NVIDIA is doing really cool things. For example, the GPUs that we bought was a limited fleet last year, and we actually bought that from NVIDIA. So they're doing really interesting things in terms of chip technology. We actually were at their headquarters a couple months ago, looking at some of the different semiconductor chip technology that they're working on. So I would certainly watch those two. I would watch those two stocks for sure. And again, this is not investment advice.
Sure.
I also think, there's some really interesting video game companies that are doing a pretty good job at really designing in-game experiences with Web3 technology like blockchains, like NFTs, to actually amplify in-game experiences. And I think they're doing a pretty good job. I'd say like Animoca Brands is really interesting. Activision, actually, I think Activision was just bought by Microsoft. But yeah, those are certainly some of the companies that I would be looking at. You know what? Let me quickly pull up my ticker list here, and let me see what else.
While you're doing that, I want to throw another one at you, and that is the energy side of things, because obviously energy still being a big part of this in terms of growth and what that might look like, especially around companies that could circumvent, and including solar. So if you think about what is happening from Tesla's approach towards solar, obviously their acquisition of Solar City, there's many other components within what Elon's plan is for electrification of America through, especially the world, really around electric cars. But solar is a big part of that. Now,
Yeah.
when you look at solar and energy, two big things that the mining industry needs, or at least potentially needs, are there some
Yeah.
companies that you're looking at that could potentially help lead the way there?
Yeah, so the block has done a really interesting partnership with another company to actually use solar energy, just pure solar energy, to mine Bitcoin.
Mm-hmm.
I'm not really sure how much hash rate they've actually been able to secure, but I think that that's a really interesting pure play proof of concept of using direct solar for mining Bitcoin. And let me just, there's another company
Do
here.
you do you feel that solar is a viable option for Bitcoin mining if done
So
the right way?
right now, one of the problems with solar energy is that it is not. The problem with renewable grids is that they don't always match, have a like direct demand to supply match. Like
Mm-hmm.
sometimes it's actually quite mismatched, which is why you need redundancies in place and backups. In the past, it was fossil fuel, but now we look to hydro and nuclear. And the problem with, when a solar grid or a renewable grid needs, additional energy because there's more capacity demand than it actually has, is that, the grid will often flip again to let's say a nuclear plant. But for a nuclear plant to power back up and on, because oftentimes you turn off a nuclear power plant if the power is not being used because you don't want to waste that energy, is that it takes quite a few hours to actually power up and be able to support that solar grid if it doesn't have enough capacity to meet the demand. But where Bitcoin mining comes in is miners can partner with nuclear power plants so that when the nuclear power plant energy is not being used, or not being in demand from the solar grid, so when it's doing its job as sort of the backup singer,
Mm-hmm.
miners can be the off takers of that excess power coming from the nuclear power plant. And then when the solar grid needs the power from the nuclear grid that the miners are using, they can easily power down within 10 to 20 minutes and feed that power back to the nuclear grid
Interesting.
to feed to the solar grid. So that's one of the ways that mining really complements renewable grid operators. And so, yes, I certainly see a world where there is more solar being used, but I actually think that wind and solar companies really need to get a little bit louder just about how helpful miners are being to their
Yeah.
redundancy issues, because that's one of the big issues right now. So I'm not sure if I butchered that explanation of how
No,
the
I
grid
think
works.
that's good, and it also does open up the issue that I've often, because as we've dove into solar pretty heavily here within our own channel, just really diving into some of the companies that we're innovating. One of the things that
Yeah,
you just mentioned that is interesting to me is the software management of those kind of grid kind of scenarios, because Texas, my home state. I get to talk to all my family back there. They've been through some really tough winters and obviously heat waves.
yeah,
And the issue that happened last year when the grid basically went into shambles during the winter and we had so many people without heat in the state of Texas, a lot of that could have been controlled through different kinds of software management. So to your point, especially around nuclear, in terms of software companies, and this is something we're starting to research, I'm looking into a lot more. There's most likely going to be some grid management software platforms that are starting to roll out and be able to do exactly what you're talking about, being able to manage that offload coming from miners, moving into solar fields. Obviously, here in Florida, almost all of our electric here for FPL is done through solar. So I could see that being another big sector in the industry that we're going to be watching at least very closely as software development.
um, sorry, I found another just on this topic of company that's really interesting is a company called Sunified Chips. So what they
Okay.
do is they chips that can be embedded in solar panels and recorded with provable data that can then be posted to the blockchain and then traded, ultimately fostering
Mm,
liquid markets and renewable asset trading. So that's another piece of this whole renewable markets, right? In terms of carbon credit trading that companies use for offsetting.
yes.
So
Yeah.
so that's Sunified Chips. That's a really interesting company that's working on that side of this whole renewable space as well, using the blockchain and using chip technology. And anyway, sorry, I think that's another just back onto companies that we think are interesting. That's one that I would be looking at as well.
Yeah, for sure. And just as a disclaimer, you guys, we use these market movers from time to time. We'll do these kinds of interviews where we're breaking down things. Anyway, this is not financial advice. The goal here is
Not investment.
hopefully opening up your eyes and you start to realize just how deep the hole goes in terms of blockchain and the evolution of all these great crypto projects out there. I want to get into a couple more items before we let you go here. And one, of course, is the next Bitcoin halving. We're having this now potentially in 2024. We see some real lean in on this. 2024 could be our next real bull run that we see maybe occurring even as early as the end of next year. Now, with that being the case, there's been some indication that maybe this next halving is already starting to be priced in. Your point and my question to you is, when you look at the current price of Bitcoin where it's hovering around 20 to 23 right now, what is that point of no return for miners? Because you kind of know all the fiscal requirements here. Where is that? All right, guys, we gotta reconsider and take a look at doing some potential Bitcoin sales.
Yeah. So again, Hut, we've set ourselves up. I mean, never say never, but we've set ourselves up so that we took a balance sheet first approach in the bull market so that we were cashed up, that we'd have an unencumbered stack we could potentially lend against, so that we, ideally would not put ourselves in a position where we had to sell Bitcoin out of desperation. I do think if we saw BTC go down to 14,000 US, we'd certainly see a lot of people lose their shirt.
Okay.
But one of the things that's really great about, again, mining technology is that it's pretty easy to go to power down your machines into eco mode in a matter of minutes. And also use software technology in real time to gauge, okay, where are energy prices right now? Where's network difficulty? Should I flip my machines back on? But I think 14,000 US, you'd probably see a little bit of drama play out in the market.
Believe me, in more ways than one, I think, not only just from a mining aspect, but just in general, I think the market would have some, we'd have some heavy naysayers. Jim Cramer would be all over that. Bitcoin is dead, I tell you, smashing the red button. We'd hear it all.
It was really interesting. The CPI numbers came out a couple of weeks ago. Gold only rallied 1.8%, and Bitcoin went up by 6%. So,
well, you're right. We had that mini rally, for sure.
Yeah.
I mean, it ran up to almost 25. So, it has been something that I think a lot of people and for me, when I look at analyzing assets, and because of what we do on our power index, we measure sentiment. And what's surprising to me, and I've been measuring sentiment for over a decade, around big brands, small brands, culture trends, all those kind of things. And when you start to apply this to a culture-driven asset class like crypto, you start to see certain patterns. And one thing that still surprises me to this date, and even looking at our own data, is how resilient crypto has been with such a small market, because it really is a very small market when you think about just the number of companies, the number of investors that are within it right now, still under $1 trillion. I'm just surprised at how resilient it is. I was looking at this tweet right here, Sue. Here's a potential roadmap. This is something he's envisioning. This is coming from Accord Bashgoria, and he says a rally all the way to the reload zone around 49.58K, a correction to get out of the Wyckoff check. This is simply some trading things, then up until the halving and beyond. Now, this is something that we're seeing. You and Hut 8 have lived through these cycles before. And when you look at the cycles of the next halvening, this being the fourth halvening, I think we'll go down to, let's see here, fourth halvening, 3.125 Bitcoin reward on this next halvening. So when you think about that, all right, and the cycle going into it, we have a lot of macro coming into us. We've got an election coming up this year. Then next year, potentially wading through a recession that may be, classified as a recession or not. And then we still have global issues, okay, beyond all those things. So a lot of pressures on the market itself. We could see a little bit of loosening in terms of the overall inflation rate starting to slow. That being the case, we'll see some slowing in interest rates, maybe Q1, Q2. Now we're starting to lean into the next halvening. If we get past next year, do you see us actually seeing a little bit of an uptrend not investment advice, but an uptrend based on historical applications around mining Bitcoin. What have you seen around leading into those halvening periods?
Yeah, I mean, leading into those happening periods, usually that is incredibly bullish for the price of Bitcoin because supply is obviously built in. The built-in supply mechanism is doing what it's supposed to do and reducing that supply, which obviously should increase demand. But I think what's really interesting this time that's very unique from every other halvening is the mainstream adoption that
Right.
we've had. Like we've never gone into a halvening for Bitcoin where there's bipartisan bills being put forward like the
Sure.
the Miss Gillibrand bill, which is pro digital asset regulation. We've never had sovereign nation adoption of Bitcoin like El Salvador. We've never had the Visas, the Mastercards, the Shopifys, the PayPal's of the world, the Abras parting with the Amexes of the world, providing crypto rails in Bitcoin, or like the Morgan Stanley's, the JP Morgan's, the Bank of America's writing research reports and providing their customers with ways to participate in this asset class. So this is a very unique happening that we're going into. Not investment advice by any means, but I think it should be pretty bullish, especially if we do see interest rates come down and risk assets become more palatable for investors. And also, if you even look at, and this is me personally, if you look at if Bitcoin were to capture even like 3 to 5% of gold's market cap right now is what, like 12 trillion something.
Yep.
If Bitcoin were to capture even like 3 to 5% of that, that is an incredibly accretive to the price per coin where we're sitting at right now. If it took that portion of gold place in people's portfolios. So I do think we're gonna see quite a run up into this next happening, but not investment advice. So we'll see.
Yeah, for sure. Let's talk finally about
really quickly. I should also say Bitcoin, and then the correlation of Bitcoin versus Bitcoin miners. The correlation is about 0.94. So if you do believe that Bitcoin is going to rally, based on historical correlations, it should be a rally for all Bitcoin mining stocks because we are a proxy play.
right.
But also, when we talked about what miners have a diversified business model, you're getting that additional upside in whatever businesses it is that they're building out, be it, selling energy back to the grid like Stronghold, or providing HPC for Web 2.5, Web 2, Web 3 like HUD 8. So as an investor who's doing due diligence, I think it's interesting to keep that correlation in mind when you're looking at sort of entry points into a stock.
Let's talk quickly, because we almost forgot about this, and that is Ethereum obviously going into its merge. How will this affect mining operations who are mining Ethereum today? What is that going to look like? Is there going to be a divergence into some other hash, resource diffusion of where the mining operations could be jumping off the main, the mainnet being, Ethereum itself? What do you see going on there?
Yeah, so what we're certainly seeing on the ground, and the sort of whispers we're hearing, is that that GPU proof of work based hash isn't just going to die, that it is probably going to be redeployed to the next most profitable GPU based proof of work chain. In this case, it is Ethereum Classic. And if you look at what Ethereum Classic has done over the past month, it's up actually 184%. And we think that that's because people are anticipating that there is going to be sort of a big influx of hash going towards that shift, towards that chain. For example, for a miner like HUD, so 15% of our monthly Bitcoin production is actually done by mining Ethereum, but getting paid out in Bitcoin on the pool level. We do this with basically the Ferrari of GPUs that we got from NVIDIA last year. And so if we were to switch, if Ethereum goes to proof of stake tomorrow morning, we can switch within the next 10 minutes to mine the next most profitable network. We do that through our relationship with Luxor Mining Pool. And then obviously back to the sort of GPUs that we hold, what's really cool is that when we're not mining Ethereum and getting paid out in Bitcoin, or not mining, ETC and getting paid out in Bitcoin, we can actually have customers come in and use that compute for their own compute needs. The servers they sit in can be repurposed to machine learning and AI. So I guess this is my long-winded answer of saying that we don't think this is just going to be an ETH miner capitulation event.
Okay, all right. Well, I think that's the whole point to your question, or to your statement there, is that do we see enough, shift over to alternative assets that could be like you're talking about with Ethereum Classic? It could be the gateway for, other assets that would take up that hash and be able to deal with it. We are going to take some questions for you guys from the audience. One last thing to you, Sue, when you look at, and this is back to kind of the stock value, because obviously HODL being a publicly traded company, but you look at a lot of the miners like HODL and others who are creating this diversity in terms of both income and revenue resources, technology adoption, acquisition, all those things. When do you think we'll start to see some of the tech crypto projects like a HODL and others, many others, that would separate from Bitcoin? Meaning, if Bitcoin goes down, these market and these particular stocks don't necessarily see as much of an effect. Do you think that's going to happen in this next cycle?
That's really interesting. And certainly I would hope so. I think that the market needs to see the numbers behind just how meaningful some of these new models, these new business models, these new ancillary lines of business revenue really are. I think the market fully doesn't understand yet the significance of companies moving from Web 2 to Web 2.5 to Web 3 and what that means in terms of a data center need. So I think there's still a lot of education and numbers that need to come out from companies like us, like HODL. But I think that we should start to see a decoupling event soon, which is again why, not investment advice, why miners are really interesting to look at as a way to get exposure to this asset class, because you can get in at a reasonable price point, but also get the upside with the different business lines that these miners are building. So,
yeah, very cool stuff. We're going to break over to our Q&A sector of the show now. So I do want to because Sue, I know you got a million things to do, but we do appreciate it. If you guys like to have these kinds of conversations with leaders from the mining industry like HODL, just make sure and smash the like button. That's how we get feedback from you guys. It also helps the algorithm, so make sure and do that. Sue, thank you so much for stopping in today. We really appreciate it. It's been great.
Love being here. Love your audience. See you next time.
All right, see ya. All right, so you guys are tuned in still. Again, we'll get to some of your questions, because I know you guys have a lot in terms of things that are happening within the space itself. A little bit in the ask there from Jeff. Obviously sold most of his AMP bag this week. It's been a sad goodbye. I really believed in Flexa. Listen, on this, I just want to kind of make a statement here. Yes, there are troubled times for Flexa. I would love to, Tyler, if you're listening to this, we would love to have you back on the channel to talk about the roadmap of how Flexa is going to go move forward, especially with this delisting from AMP. Because I would love to kind of find that out. There may be, remember, Flexa is still a very viable technology of what they've been able to do in the payments industry. The question is how they're going to be able to maybe address the securities aspect, because just because something gets delisted simply means that they have to do disclosures to be qualified as a security. Now, I'm sure there's a lot of attorney scenarios going on right now, but I don't necessarily count an altcoin out if they get tagged as a security. I think the opportunity here in the future, if and most likely we will see altcoins move into security aspects, is it's just a matter of being able to handle the legal ramifications. People do it every day in taking a company public. So maybe one of those things. Let's go to Shoeless Joe. Okay, what about batteryless pumped storage technologies to store energy for time of deficit? We do a lot of study here. As you guys may not know, TechPath was originated around technology overall. And originally, a lot of our show content was built around solar, electric vehicles, crypto, blockchain. It just so happened that crypto and blockchain became the powerhouse of the show, but we had a lot of research and continue to do a lot of research. Obviously, it's just a passion of mine in terms of understanding how power and energy will be used. I think the scenario or the situation right now with the potential use of batteries, I think is what you're asking, Joe, is battery use cases to be able to offload that with building up battery. Elon has done that in Texas right now in the Texas power grid to essentially use batteries as kind of that buffer between the grid. In some cases, it can be solar. In other cases, I think it's going to be interesting to watch miners who deploy those kinds of technologies around ESG strategies for sure. Any quick thoughts on Celsius from G2? Okay, so Celsius obviously still very much in trouble. There's a lot of turmoil right now with whether or not we're going to see Celsius's management team step aside. There's many potentials. I know Simon Dixon is trying to pull a move on Celsius. But remember, they're in the bankruptcy court. Things change in the bankruptcy courts and how they perceive and work with others in terms of the non-accredited investors like us and the investors and or credited investors, and also the vendors that are have security. So the ability for them to get to that is going to be still kind of up in the air. But remember, if it's a bankruptcy court, the scenario is just going down in pecking order of what companies have any type of claim to those assets. And of course, the claim value is going to be very interesting because there's a lot of variations between the value of Bitcoin and other assets like ETH and so on, especially if the ETH merge comes in, because Celsius had so much to do with staked ETH. There's just so many things that are still up in the air. I think if this thing it will drag on through September, they may actually end up being able to get into some positions to pay back many of their creditors and possibly get into their customers, providing the merge goes through on Ethereum. So we're really watching that one very closely. All right, so let's see here. The Mad Monk, why Activision and Microsoft? Gates says otherwise. Don't really understand that question, but I'm assuming our guys do because they put it up here. But I can say this, if you want to watch more about our gaming show, check out Metaverse Insider. It is where we break down games and all that kind of stuff. If you've not caught that podcast before, we do it on another set, but it's also a breakdown of games. We do a wrap up here at the end of each month, but we are starting to roll in more content with Gala Games, so a lot happening there. We'll definitely feed you guys into all that. Don't forget to reach out to us and let us know what you guys think about this format, because I'd love to know your thoughts on bringing in these correspondents that are very integrated into the fields, especially the professional fields that each of them belong to. We have macro guys coming in, obviously Sue from HODL to give us kind of a mining report. We'd love your feedback. Do you like it? Do you not like it? Just put your comments below. Of course, if you want to join the Diamond Circle, we'll leave a link below. Also, if you want to reach me, it is out there on Twitter @PaulBaron. We'll catch you next time right here on TechPath.